Welcome back to the Trading Apologist. My name is Tom, and this is your daily market recap for Friday, December 19th, 2025. And today, markets continued their positive momentum off of yesterday's cooler than expected CPI numbers here in the US and the after hours dovish comments from the Bank of Japan as they increased their interest rate by 25 basis points. And we got above some key resistance zones on the S&P 500, which are beginning to suggest that the low we saw on Wednesday of this week could be the low for December, and we could be setting up for an end of year into early January Santa rally. I hate using that term, but it is what it is. And it has been elusive the last couple of years because we have not gotten it, but I am optimistic for continued positive price action in the 2 holiday trading weeks ahead. And what was notable today was that we saw rotation back into tech and semiconductors. The Russell underperformed. The S&P 500 and Nasdaq moved in lockstep, closing near the highs of the day, and the Nasdaq actually outperformed slightly. So let's look at the charts for those to see what we can expect next week. There is still a little bit of resistance overhead, and today we are also going to do our deep dive sector review, where we look at all the major sectors we're trading, the leading names within those, so we can get a feel for where capital is flowing and how we should position ourselves for the last 2 weeks of 2025. I can't believe I'm saying that. What a year it has been. So let us get right into the charts. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Okay, starting like we always do on the S&P 500, and you can see today that we got above that critical $6,800 level, and we got into our next point of resistance at 68.43. I've been saying 68.50 just to use round numbers, but it's really 68.43, and our point of control is right below that, and you can see how we rejected from that level in the afternoon today. And this will be our major hurdle next week. Getting above this really sets us up to test and break through 6,900, and then it's an easy hop and a skip into all-time highs. God, that was cheesy. I should stop talking this late. Anyway, let's get back into the analysis. But I want to talk about why this 6,800 level was so important. And I'm just going to bring up a anchored VWAP tool. If you haven't used this, on the left below your main mouse tool or cursor tool, whatever it's called, 4 down, and you have long position, short position, anchored VWAP, fixed range volume profile. Go to anchored VWAP, and this isn't really a moving average. A lot of people think it's a moving average, but it's more for context setting and finding event-based fair value off of a major pivot point. So at its core, I would say it measures, well, it does measure average price weighted by volume. And if we take a major low, like the 21st of November, and we draw in an anchored VWAP, that gets us right to 6,800. So you can see why this is such an important zone. But we can go back further. We could go all the way back here to the 29th of October and draw in an anchored VWAP there. And you know what, just one thing as a note, everybody's like, oh, am I drawing it right? You can hover anywhere over where this candle is. I can click down here, and it's still going to anchor it to the appropriate point. So you just got to be on the right candle that you want to anchor it to. But that's coming in just below at 67.87, so really close to that level. And just for fun, we can go up here to our local high from the 11th of December. You can see how that's coming in at the same zone. So really important level. And right now for our current trading range, you can see this orange line for the point of control of the overall price action. And where we rejected from, the reason that level is so important is if we go back here and go to the fixed range volume profile, and we draw that over this entire area just to get the trading volume for this consolidation zone, you can see how that falls right at that 68.42, 43 level where I have that resistance line drawn in. So that will be our major hurdle, and we have a lot of support below. So even if we reject a little bit next week, I imagine we're going to find support at 6,800 again, and then can start the process of recovering. And once we get above 6,900, like I said, then all-time highs are pretty much in the bag. All right, if we go over to the Nasdaq, you can see how the Nasdaq closed a little bit higher on its end of day candle, but also got into a bit of resistance, which is really at 25,350, this little volume spike right here. But we got above our key level as well on the Nasdaq, which is at about 25,200. I've been saying 25,000 as a key zone, but 25,200, these previous highs, are what's really important. And not only is it because of this previous price action, but we can do the volume weighted profile as well, the anchored VWAP, and you can see how that's sitting right around that zone, both from our low on the 21st of November and from the high back here on the 29th of October. And those are coming in really close to one another. And you know what, just for fun, so we're being even, we can take the local high too. You can see how those are all clustered right in that 25,200 zone right there. So lots of support down below. And I would say if we can just get through this little resistance here, our next major chunk of resistance starts at about 25,570. So we can say 25,500. Why not? For round numbers, what's a few points between friends? And last thing I'll mention on the Nasdaq, just on the 4-hour in terms of mean reversion and RSI, we've got a lot of room to recover. And the 22nd, Monday, is also again seasonal date. I think solstice is on Sunday on the 21st, shortest day of the year. And often those can lead to pivot points in the market, or near there within a couple days tolerance can lead to a pivot point in the market. So perhaps that's what we just saw today with funds rotating back into tech and semiconductors. All right, looking to SMH, which also just on the 4-hour in terms of mean reversion and RSI still has more room to run. We are in into a bit of resistance now at about 358, 360. A lot of previous highs and little consolidation zones right around this level. And overhead, we have the 786 retracement, the Confluence Mile Center Cloud, coming in at about 363. So, you know, for the next 2% to the upside, well, 1.5%, anticipate a bit of resistance. We have 7 bars up on the 4-hour chart here in one swing, which can often lead to a pullback. So as we were looking at some of the other charts that could pull back into support, this could come back down, you know, to 358 or so, the 618 support, and then continue on up. But we don't want to see this just explode in a straight line upward, because that normally leads to sharper corrections. All right, and moving on to the Russell, you can see how that has been pulling back for over the last week. Positive day to day with the rest of the market, but percentage-wise, if you compare this to the Nasdaq or to SMH, this has been underperforming. All right, let's go through and just look at a couple key things. The DXY was oversold on the daily. We have a mean reversion dot bounced from the Confluence Model Center Cloud. So I imagine the DXY is going to continue to recover, maybe up to 99 and change. And then we'll be fighting the 200-day moving average again. And I can see that this is setting up to break down more. But let's see what happens at that 200-day moving average. In terms of gold and silver, they both climbed into the end of the week. Gold has, been consolidating and drifting just slightly higher over the last few days, and silver has continued to be the star of the show since, let's see, when was that? October 28th. Let's take the beginning of December 9th. Since the 1st of December, we are up 20% on silver. It has really been flying, getting close to the doorstep of $70. All right, quickly clicking through the other sectors. XLF financials have been consolidating. They are overheated after outperforming the rest of the market for a couple of weeks. We're on the daily. Energy is back testing its breakout for support potentially. We haven't quite reset in terms of RSI and mean reversion, but energy on a broader scale is one to keep your eyes on. If we look at this just on the weekly, you can see how we are in this massive flag on the weekly that we are eventually going to break out from. Healthcare trying to mount a bit of a recovery, but struggling at that 156 level, which aligns to some of the previous highs back in September of 2024. So let's see if this can do it and break back into all-time highs. But it was a little bit extended and just needs to cool off, and most likely is going to consolidate for a bit. All right, Biotech still performing strong in a bit of a flag pattern right now, which is absolutely fine to reset the charts and to cool off a little bit. So watch this for how it breaks. And Biotech, if it breaks this positively after some consolidation, could see another massive leg up off of a flag. And retail still cooling off. We've got a bit of a double top in play, actually very close double top. And we haven't really broken down on the daily confluence model cloud yet, but this did need to reset a little bit. So retail's been taking a breather, and let's see if this can continue the uptrend a little bit longer to break into fresh highs. And just lastly, looking at VIX and MOVE, VIX dropped back down to 14, so very low volatility here on the VIX. We did have that one read we looked at that suggests there could be a bigger pullback in markets within the next 4 to 8 weeks based on some of the low VIX reads, but nothing to worry about in the near term. And MOVE bond insurance just fell off a cliff, so this is clearly illustrating risk on coming back into the market. All right, let's start with semiconductors, and I'm going to begin with A-Lab because I know a lot of you are in this trade, and it was a challenging one, but support did hold. We've had this uptrend that we've been in since the April lows, which we tested back again on Friday, the 21st of November, and tested again the middle of this week on Wednesday. So that support held, and the breakout of our falling wedge, the retest of that as support held, and we were up over 12% today. So great move, great recovery back above the 50%. We have to pass these swing highs at about, well, this one right here at about 175 would be great to get over just this first swing high. And then obviously we have the next one at 182, but even just passing that previous swing right there is going to be a great sign for recovery. And that would have me thinking that in the near term, we're going to be moving up to about 200 or just above, where we have both a fib level and the confluence model center cloud right there. And then the ultimate price target of 260. We'll just have to wait and see if we can get back into an uptrend in the upper band. But it's looking good so far. And if we just go over to the 4 hour, I just want to see if we have a local overhead resistance line. You might have a little bit of a trend line to watch here that you could argue we're coming into for the third time, or if you form fit this a little bit, you could say that we touched it today just based off of all these candles ignoring this one little wick. So let's see if we can break through that. This would be our fourth touch point, and fourth touch points normally lead to breakouts, so watch this on Monday. All right, let's look through some of the other semiconductor plays, and ASML, it broke back into this range and just got into that as resistance. And we also have the daily confluence model center cloud just overhead right here. So between where we're at about 1,060 to 1,073, I'm just concerned that there's a bit of still resistance there, and it feels like the daily chart needs to reset a little bit more. So keep your eyes on this. If this does play out as a flag pattern, we've been targeting just over 1,300. So that is something to watch there. But a few signs of weakness. Now, STM, if you're in Patreon, my brokerage unfortunately does not let me trade this. It's a smaller company, but we have a clear flag pattern in play. Looked like we were breaking out from it at the end of last week, and we dropped back in. It didn't have a massive day today, but it is still respecting this zone. So we're right around the 200-day moving average, the obvious point of control in terms of the VRVP. And if it can get above this, it does really have a shot of moving up to the $30 mark. So keep your eyes on that. NVIDIA is holding the line just barely. We were concerned about this swing low at 169, 170 breaking, and that suggesting lower prices. And really our next support was 164, and then getting into the 150s, honestly, below that. So seeing this bounce today was a good sign, and I'm hoping this can hold and follow through. Now we are into the point of control at 181 for this consolidation range that we've been in since July, really. outside of, the breakout into all-time highs in October. So it does have some work to do right into resistance, but a good sign today. TSM is really just consolidating nicely. I don't have really a signal one way or the other outside of saying that if we get a fourth time attempt at a breakout of this resistance level at 311, that could lead to a more meaningful move. So something to keep your eyes on there. MU, after earnings this week, got into fresh highs, and we do have a little bit of a gap to watch to the downside, but MU, strong performance on the back of earnings. We still haven't really fully reset the daily chart, but perhaps this is one of those anomalies where it can run much further than you think. And honestly, my price target was all the way back here at 172 after we had a pretty nice recovery and an extension off of that recovery. All right, LAES, they had a breakout today from the symmetrical triangle. It doesn't look like it here on the daily, but if I go into the 4 hour, you can see how we just barely got above that trend line and have been finding support on it from the overside. So it would be nice to see this continue next week. So let's keep our eyes on this. It's just barely above the point of control and trying to break out of this little basing pattern here, which is, in terms of the correction, giving us a higher low, or it appears so. So then the question is can we get into more of an uptrend? And the confluence model bands are squeezing on the 4 hour. It would suggest that we are moving into that kind of part of the pattern where we could pass that $5.20 swing high here and continue on in the uptrend. All right, moving on down the line, AVGO, while it did see a bounce today, we're into the point of control here on the VRVP, and this trend line that we broke down from, we are not quite there, but we're almost back testing it from the underside. A massive volume candle today, which is something to watch out for because that can often lead to turnarounds in the market. But I'm also looking at the 4 hour, and the 4 hour, we just took our first, well, I guess you could argue our second swing in the lower band. So if we can get above this, maybe it's got a shot at a quicker recovery, but I honestly would have thought it would take one more swing down. I've been watching around that $300 level. If we go back to the daily, there is that big gap to close down there. So just getting that checked off and resetting to that level would be good to see. Let's see if this leads to a turnaround with that volume spike, but just closing this gap would make me much more comfortable about getting in. And then on the daily, we'd probably have a mean reversion dot and have reset the RSI as well. SanDisk is looking interesting. We've been consolidating, finding support at the Confluence Model Center Cloud here, and it is just getting into some overhead resistance where we've rejected before, but this almost appears to be forming some kind of ascending triangle. So even if we pull back, just this tightening could suggest a breakout to the upside. So definitely watch SanDisk next week. Western Digital also had a massive volume candle. There's definitely something going on with the volume today, and I want to look at the mega cap tech players too, because in the last 5 minutes of trading, there was some funny business going on with some selling in Amazon and Meta and moving into Microsoft and Google that was very curious to see. But keep an eye on Western Digital. Looks like, well, the question always with these volume spikes is this a pivot point where the market's going to turn? It has been very elevated for quite some time and would need a reset, but the sales have been good and it still has the wind at its back. Not the place where I would necessarily get into a trade, but anyway, CoreWeave. This one has been very beaten up, obviously, and we are potentially forming a double bottom here at 64. And what's interesting about 64, if we go all the way back in time, it aligns with this post-IPO first peak. So good to see us finding double bottom support here. And if we break the intervening high at 91 next week, that sets us up for a price target of at about 120. All right, AMD from the Patreon group, Birdwatcher123 and NJ both want to look at AMD. And on the daily, yes, we have a mean reversion dot. RSI has not fully reset. I guess you could argue, well, not really a double bottom. I'm just seeing what's going on here back in time to see if we have any support. I just don't love this massive gap. If we got back down to 160, it would feel much safer for an entry. I don't know everything about the fundamentals, but a lot of folks have been saying that there are some concerns in the background with AMD. I don't necessarily have a lead on it. You could say maybe a little higher low, but this doesn't look very convincing to me. I would honestly give this one just a little bit more time. If you can break these swing highs at 225 and then you get a pullback in another higher low, I'd be a little bit more convinced of the recovery. But right now, something just feels off. All right, let's look at the AI side of things. Tesla has been cooling off the last couple of days. It was running when the rest of the market was weak, but that's to be expected after breaking out. We're still holding this small 4-hour cup and handle breakout and the larger cup and handle. So it's just cooling off a little bit. Let's see on the 4-hour. Yeah, I mean, this could consolidate, through Monday and then have a move higher. It definitely is a bit overextended, but it has momentum on its side. It's the first swing in the Confluence Model Upper Cloud. So don't, fade Tesla when it gets this kind of hype and momentum behind it. PLTR did have a breakout today. If we look at this on the 4-hour, you could suggest that there is a cup and handle here on the 4-hour that we just broke out from. And if we measure that out, and sorry, it should be one candle over, but we're close enough here. Yeah, close enough. And then we measure that to the breakout. So that would suggest all-time highs, really, 234 for Palantir potentially from that breakout. You could argue that this is an inverse head and shoulders too. If you extended this neckline over, you could say, okay, left shoulder, head, right shoulder. The right shoulder is a little smaller, but that's just showing strength and buyers stepping in earlier. But for all intents and purposes, they're measured the exact same way. So you get to the same price target, whether you're looking at it as a cup and handle or inverse head and shoulders. All right, Mogix, M-O-G-I-X, I'm probably pronouncing it wrong from the Patreon group. I believe you're in France, so I'm probably butchering it. Anyway, wanted to look at NBIS, which had a great recovery today on the daily candle, and this has been in a downtrend. We looked at this a while ago. I forget exactly what they do, but I had mapped out these couple of gap fills, which we did not quite hit. I have an alert set for it. This recovery was a good sign, and let's just look at the overhead resistance. We are right into that right now. Let's see if we get any more info on the 4-hour. See, on the 4-hour, that's why you always go to after hours, because after hours, it pushed through a little bit. And that would be 1, 2, 3, almost attempted there, but really this is the 4th time we touched it. So in terms of the 4-hour RSI mean reversion, you have momentum, you're pushing through. That's a good sign. And we could map this out as a bit of a falling wedge, I believe. Well, if we're a little generous with that wick and we tighten it up, I normally like going exactly off the wicks, but we're just going to sharpen it up like that. And then we have our falling wedge, and we measure between the first 2 touch points here to here and take that to our breakout point right there. So that would suggest pretty much at the top of the falling wedge at 135. We are right into the point of control, so something to watch out for, but RSI mean reversion on the 4-hour would suggest it has room to move, and the daily would suggest it has room to move too. Now, this uptrend that we broke down from, this is one to watch, and I'll turn this on for the 4-hour as well, because that can sometimes turn into resistance after you've broken down from it. So keep that on your charts, but all in all, I would say it's looking pretty okay. All right, BBAI, which again is a riskier one, but I was kicking myself for not paying attention to it today because we had this falling wedge breakout and we have the much higher price target at $9. And I got out of it just because we were overextended on the 4-hour chart, if you recall, a couple of weeks ago. And it corrected, bounced off the 200-day moving average perfectly. Wasn't looking at too many charts to watch. And today it bounced 17% in a day. So very nice recovery there for BBAI. If it pulls back a little bit, I might take a nibble again. But missing all of that is kind of frustrating. Makes me feel like I missed the best part of the trade. All right, quantum corner. So if you recall, we took a quantum trade on this inverse head and shoulders breakout back here a couple of weeks ago. And the price target for this was 30, which we almost got to and got out of it when we were overheated and started to correct. Now we found support and we have mean reversion dots back to the lower end. QBTS in particular has been in this symmetrical triangle pattern. So great recovery today. We are into resistance from the confluence model cloud, and we have that trend line overhead. But assuming we can break through that, we are squeezing on the bands in a fashion that would suggest that we can potentially move back into an uptrend, and then we can measure out the price target from this symmetrical triangle. So we hit price target 1 almost, and now price target 2, wherever this breaks out from, we would measure that out. And really where it's pointing to at 35, 36, if it breaks out sooner, that's the point of control. That would make a lot of sense as a point of resistance. Now, if we look at some other names, RGTI, for instance, has not been as strong. It definitely is oversold and is trying to bounce. And, I'm just trying to look to the left to say, what support are we into? Not much, really. But I'm still a little weary of this one. It's right into a bit of resistance right now, while trying to get above the confluence model center cloud and that 24 level. So keep your eye on RGTI, but it's not looking quite as strong at the moment. And we never really reset on our RSI. And QUBT, this one had a rising wedge that it broke down from, so also weaker looking. A little bit of a bounce today, but all in all weaker from this pattern breakdown. And on the daily, just because we're in the lower cloud, it would suggest that we're going to have one more pullback and a swing lower. And then we can look to see where that support comes in. And if we bounce from about 887, let's just set an alert there, then that would be, a decent zone to consider potentially getting into the trade. But I would give this one a little bit more time. And then IONQ, last one. This one's broadly holding support at 46. If we look at it in the 4-hour, just so we can see this overhead resistance, we can draw that in right there. And I guess you could make an argument for a bit of underside support there, just to map up some kind of tightening range that can tell us when it's going to break. We're also squeezing in the center of the 4-hour, so this is going to make a decision. But really, for all intents and purposes, QBTS is the leader of the pack in terms of showing strength on the charts. All right, quick dog break before we get to space because he's feeling lonely. Here, can you go up? All right, thank you. Say hi to everybody. All right, you got your attention? Good man. All right, dog intermission complete. All right, let's look at space stocks because this has been a major leading theme. And SATS had another massive run last week on the back of the SpaceX hype. The price target we have, if this is a flag with 100% extension, is about 136. We're at about 103, so over 30% to the upside. But we are overheated on the daily, on the weekly. We are very overextended. So, this looks like it is taking off, haha, pun intended. And these kinds of moves don't last forever. So this isn't really where I have any edge for an entry. I would be cautious with something like this. You could try to play it for that last bit with a tight stop loss, but not necessarily my kind of setup. Now, if we look at BKSY, this we were looking at a couple of months ago, saying, is there a cup and handle? And we attempted to break out and rejected. And whenever you see a failed pattern like that, it's just pointing towards weakness. And we broke these previous swing lows. Now we have mounted a fairly impressive recovery locally on the daily. And if we look at that, we dipped into the confluence model lower band just once and back tested the 200-day moving average for support. And normally when you get into the lower cloud, as we always talk about, you take a couple of swings. I thought we would have retested this trend line. We did not. This is actually an extreme sign of strength. And maybe, no, that predated the SpaceX hype. So That is actually a good sign. And with the new Trump executive order to invest in space, this could definitely be one of the ones to keep on your bingo card. And it has got a lot of room to recover on the daily. And on the weekly, I think I just wanted to look at that too. Yeah, we did hit that mean reversion dot on the weekly, but we're resetting back into the middle of the range. So it looks all right. And then on the 4 hour, looks like it's just about to move into an uptrend. I wonder how much we missed percentage-wise off that bounce. Whew, 20%. So painful when you miss that. It doesn't look like 20% on the charts, but that was a clear signal there. 200-day moving average oversold on the 4 hour with a mean reversion dot. That would have been good to catch. Congratulations if you did. All right, and ASTS, after this massive downtrend, it just looks like it's recovering. Higher high, higher low, moving its way back up. Room to run on the 4 hour. I believe we were looking at this as a falling wedge right here. So let's just measure out that price target, see where that gets us. All right, and we could take this one. I'll take the conservative price target. Why don't we do that? And I'll measure between the two touch points that we actually have. Some folks would measure it here, which would get you a little bit higher, but let's do that. Oh, and actually that's interesting. This first move hit the price target perfectly. Now pulled back and reset. So we don't have a price target in play from the falling wedge necessarily, but this does look like it is attempting to recover and move higher. And on the 4 hour, you're just getting into the confluence model upper band. Let's see on this one the last couple days, 25%. Space, man. And we're trying to get back into the upper band on the daily. All right. So I feel like I'm a little late missing that, but is what it is. Rocket Lab. Wow. Geez. Similar falling wedge recovery, attempting all-time highs. We're getting a little overheated on the daily on this one, but the moves the last 2 days on this, 33% this week. Massive. All right. So, I missed some of these space moves. We're taking swing 2 in the 4 hour upper band. So maybe this cools off, gives you another entry, but right now it looks like it's on a run. And I feel like I'm too late to get into these, but it's good to know. Need to keep my eye on these space stocks a little bit closer. Out of all those that we looked at, BKSY seems like it's setting up the best to have the most sustained move at the moment, followed by ASTS as the next one, but this has run a fair bit already. All right, moving on to tech and starting with mega cap tech on the 15-minute time frame, because I just want to show you those funky moves I was talking about the last 5 minutes of the day. Look at this. This is 5 minutes before the close, this massive candle up for Google. Massive bit of volume right there. That is not retail stepping in to push Google higher. And then you go over to Amazon in contrast, exact same time, massive volume, red. And if you go over to Meta, same thing, massive volume, red candle. And Microsoft, just like Google, massive volume candle, green. So big players, institutional players, were definitely doing something into the close. I couldn't find any news or event or something like that. So maybe they were just repositioning before the holiday, before they are out of the office. Who knows? But they're picking Google and Microsoft as their current winners. But it's not all over for Amazon and Meta because they definitely held key support levels. And if we go out to the larger time frames, Google here has just been correcting a little bit. We are oversold and it's due for a bounce, and we have this ultimate target of $350. So we've got about 13% to the upside, is that right? Or yeah, 13.31% to the upside. So a little bit of room left in Google. I do think on the weekly, it is going to need a break eventually just because we are very overextended on the weekly, but it has had a good run. And if it pulls back, I would love to get in on it. Amazon, for its part, just looks like it's recovering after the pullback. We had the massive spike on earnings, drop down, lower high, higher low, off the point of control there. So it, to me, and we can go on the daily too to look at this, really just looks like it is tightening up. And if we can break back into the upper band, then we can move back into an uptrend for Amazon. And it has been lagging the rest of the tech players. And if we move over to Meta is getting a little bit of resistance at the 200-day moving average, but now we have a very nice cup and handle forming for Meta. I guess we do have this little wick right here. On the daily, there's some funky wick in the middle too, but let's just say for all intents and purposes, outside of that wick, we have the cup and handle potentially in play, and that would give us a price target. Let's measure it out, shall we? And we haven't confirmed it yet because we're still rejecting from it. But assuming we break out from that sometime next week, let's go over to the daily. That would have us closing our gap down, and on the daily, that's right by the Confluence Model Center Cloud. Makes a lot of sense as resistance. Just below the double top of all-time highs, that would be at $768. So that would be a lovely target to hit. Here's that funky wick I'm talking about. No, the green candle was over here. I can't figure out this daily wick. All right, and Microsoft, even though it had that move up into the close, we are still at resistance for Microsoft. We have attempted to break through this resistance line at 492, can't do it. Confluence Model Center Cloud is coming in here. So this is suggesting it could see more of a pullback. Actually, let's look on the weekly to see if the weekly has more room. Look at this. I love zooming out, you guys. On the weekly, we are now out of the Confluence Model upper band into the lower cloud. This actually seems like a pretty good short setup still for Microsoft. So we should look at this one next week. I'm going to set myself a reminder that this will be a good one to look at for a short, despite the momentum. And really, your invalidation is so close. If you break back above 492 and, this neckline, it's such a clear line in the sand, to get out of the trade. So you're not risking too much on this one. And it's really just the story of reclaiming that breakdown line or breaking down below the 200-day moving average. And you know what? This volume candle too, it was more red on the day despite the buying at the close. And we know those volume spikes can often lead to a turnaround point. So, okay, adding it to the list for Monday. All right, moving down the list, Adobe is continuing with the breakout. We do on the daily have a mean reversion dot. So this seems like it needs to cool off a little bit. I'm just going to give it a bit of time to see how this consolidation forms because we have the 200-day moving average overhead. And if this is going to move into more of a recovery, it's going to be a multi-year thing. There will be chances to get in. And I just want to see how this does. Right now, we haven't broken past this high at 363. And I would just love to see this reset a little bit, or at least reset on the 4-hour, which we have not done yet. We are trying to, but we have a little bit of a bearish divergence on the 4-hour. So watching it on the weekly, obviously there's a ton of room to recover. I guess the one argument on the weekly, I would say this is our second swing. So can we break through? That's the hope in the next couple of weeks. If we break down, it wouldn't be a good sign, but we do have a trend line support underneath at 303. But after breaking out, you really wouldn't want to see that. That would be the hope. So yeah, again, it's great that it broke out from this trend line, Adobe. But with this bit of resistance overhead, the chart's a bit overheated. I would rather see confirmation, even if it means I'm buying at higher prices, because it's got a long way to go to recover to its highs. All right, while we're in the tech section, not all of these are tech. Like Axon makes, I think, like stun guns or tasers or something. We looked at it for a trade a few months ago and it broke down. But Birdwatcher and the community requested a look at this. And just to go back on the weekly, we had a breakout. This is where we were looking at it for a trade. And it broke out and then failed the breakout and had this massive breakdown. So I think they're looking at it for this reversal now, which has been quite good. Wow, almost $100 in it. And on the weekly, we now have a mean reversion dot. So good that we started zoomed out. And we also have a weekly higher low compared to the April low. So lots of good things on the weekly, not necessarily, a critical support zone based off of anything else outside of that. But let's go into the daily. See, it's recovering. You guys are getting good at spotting these things. I'm excited to see that. So we had the gap down on earnings, And this is where we broke that trend line and this uptrend as well. So glad we did not take that trade. But now we're forming this base and just got back into the center cloud. And I think they were saying that there was a cup and handle here, and I think they're looking at it like that. So let's go into the 4-hour to sharpen up the cup and handle and see what kind of price that could be pointing towards. And the 4-hour is showing that we are already clearly in an uptrend. And let's measure this out right here. That's a beautiful little pattern there. All right. Yeah, all signs are pointing to recovery. Oh, look at that. Right now, it's pointing right to the 200-day moving average. The underside of this trend line makes a lot of sense as a price target. I love that when a price target aligns. So that makes for a pretty good trade. 13% to the upside. I mean, I guess percentage-wise, not the most, but you have very defined risk, and you could do some call options over, a shorter time frame. For that, where resistance is coming in. Yeah, great job, guys. I mean, it's not percentage-wise the biggest trade in the world, unless you nailed it a lot earlier on the drop, but it's a great technical setup, and the weekly, the daily, and the 4-hour are all confirming this. And we saw that on the weekly with the mean reversion dot, on the daily with just getting back into the Confluence Model Center Cloud, and then on the 4-hour, we're already through the center cloud and moved into the upper cloud today. So you're probably going to take your couple swings in the upper cloud to hit that price target over the next few weeks. All right, and the last two Patreon requests in tech were Carvana, CVNA, and looks like it's forming a flag here on the 4-hour. Let's see, on the weekly. All right, weekly, we're into all-time highs. You could argue that you have a weekly cup and handle. Been pointing out a lot of these, haven't we? Which would be an absolutely massive cup and handle. When I see these, I always take them with a grain of salt just because of how huge they are. And this would suggest that we'd hit 800, almost double, not quite, but that would be very impressive. We're already a bit overheated on the weekly, and we have a little bit of a bearish divergence. And on the daily, we have that breakout into a flag pattern. Let's just look at this a bit more conservatively, because we have that flag pattern right there. And let's measure that out as 100% extension. So if we're taking the generous measurement of the flag pattern here, and then we map that out, say, to the low right there, assuming we bounce, and that would tell us 643. So that seems a little bit more realistic for the near term than that massive cup and handle. That would be 43% roughly to the upside. But, this was massively overextended. And I would just give it a bit of time here on the 4-hour, because we were so overextended, and we're testing the center band one more time. If we break down here, it's going to correct. But if we bounce, it could lead into another massive move. I don't know enough about the business, but I'm always a little cautious when things have moved a good bit like that already. I'd rather get in early when no one is talking about it. Okay, COHR, Coherent Corp. I feel like we looked at this in a call or something. Oh yeah, someone else requested it. We are massively overextended on the weekly, like to the point we were at this previous blow-off top in January of 2021. When things go vertical like this is where you should be taking profits, not looking to get into a position. Maybe, it can go a little bit more, but if you form a lower high here, I would just be careful. Anyway, not the time to enter this one. All right, really quickly, let's just look at a couple retail names. We have MC here for Louis Vuitton Moet Hennessy, and I am still looking for this breakout, and it looks like the point where it's either going to break out or break down. Our daily has reset a little bit, it's still overextended. On the weekly, we do have a mean reversion dot, so that is something to watch out for if we can't break through. And on the 4-hour, we are a little closer to being reset, but we also had a recent mean reversion dot. So I'm just kind of watching. I guess this tightening range is probably the best thing to keep your eye on right now to see what this is going to do and if it can break out or if it is going to break down, but I'm watching it. All right, Deckers, we got out of our long position and we were into the 200-day moving average of this previous swing high. We were over bought on the 4-hour. Now we dropped really quickly and got back to 30. I don't often see RSI resets that are this quick, which on one hand would suggest, hey, does this have more room to run? I hope not at the moment, but this came on the back of poor Nike sales in China. They were down like 65%. And what I was looking at today when we pulled back, because I didn't get into a short before Nike earnings, when we rejected from the confluence model upper band, I got into a short position. There are things about the 4-hour that are suggesting that this has strength and could try to push through. So I'll need to be nimble with this one. But on the daily is what gave me a bit more confidence to short, just because we also were at overbought conditions on the daily time frame. And if we're looking for areas of support, if we just draw our fib levels, assuming we correct, I always look to the 50%, which would be at about 92. And if we go to the 4-hour, I think that makes a lot of sense with the lower band. Where's the lower band? Right now, the lower band's at 85. But assuming this takes a bit of time, maybe we intersect that somewhere around 90 to 92, this previous consolidation zone, and then bounce from there. So I'm going to keep an eye on this one, try to be nimble with it. Eventually, I want to be in a long position again. I got out of my calls as well because they were expiring in March of 26. I would love to get calls that are out to early 2027 to give it a bit more time to really recover in a meaningful way. And last one here, Celsius, because it might be playing out our thesis. We've been talking about the possibility of this inverse head and shoulders, and let's just look at it on the daily. We are squeezing on the 4-hour in the bands. Can it make an attempt for a recovery? But on the daily, the reason we've been looking at it is because we are in the lower band of the confluence model cloud, and we were getting into the 200-day moving average and that confluence model center cloud all at once. So we're just looking at left shoulder, head, right shoulder on the recovery today. And can we break through next week? We'll get into resistance again up at about $44 to $45. So keeping my eyes on that. All right, I don't want to spend a bunch of time on biotech because there are too many names, but mRNA keeps performing and running further than I think it will. And we're about to test this intervening high here at $35. I actually should set an alert because we're right into this point of control. With how quickly this has gotten overextended on the daily, I wanted to hold this for a longer term recovery, but my calls are up over 100%. I should have gotten shorter expiry calls in hindsight. But anyway, when things go vertical like this, it can just come crashing back down quickly. The bands are squeezing. So I'm thinking I should just take profits and look for a point to reload because it is going to be a multi-month recovery for this. But I want to see if it can pass that high first, and then maybe I hold to the 48 price target. We'll see. But on the weekly, just got back into the center band on the weekly. Lots of room to run on the weekly. On the 4-hour, however, though, I think we are stretched. Yep. And we have a bearish divergence forming already on the 4-hour. So I think this, I'm going to set a reminder to take profits on Monday. There's always the question, is it going to pass 35? Because that puts a much higher price in play. So yeah, I still think it'll be prudent to take some profits. VO, which we've been in for a while, it had this inverse head and shoulders, which it confirmed, then broke back below. It hasn't invalidated it because we haven't broken below the right shoulder here. So I'm keeping my eyes on this one. We have an overhead trend line coming in, which I believe got thrown off. No, it didn't get thrown off. That downtrend has been in play since November and December of 24. So quite some time. And we could even draw up something a bit more local right here across these touch points. Yeah, it's not the cleanest trend line. We'll ignore that and just go with what we have here. But the confluence model bands are squeezing. If we can break above this trend line, it could recover. It just needs some more time, and it's below the 200-day moving average. And we were taking this off a bit of a double bottom play where we got just that little bit of an undercut. So this one's touchy, not as big a position as mRNA, but interesting nonetheless. All right. REGN, which we looked at back here in October, had the massive breakout, took the first swing in the upper band, bounced right off support, and now is moving up to our 50% level at 841. Hasn't broken that previous high yet, but it looks like it's doing it. So that continues to show strength. And NEO, this one has been really strong, just stair-stepping its way up. Very measured, gradual move. Looks like it's about to break out of this flag again. So, we are a little bit late to the party here, as it were. And we are also sitting right on the 50%, but a break through this could see the move accelerate a little bit, even though we are getting a bit overheated. But on the weekly, it still has room to go. All right, Beam broke out of this downtrending resistance. It's attempting to recover. Not the cleanest chart, but if you are in it, it does look like it can go a little bit more, just forming a bit of a tightening range or a flag. UNH, I know a lot of people were in this trade looking for an inverse head and shoulders here, which looks like it has failed, but you are making a higher low. So just looks like it's stair-stepping its way up. I'm not super inspired by this chart because of all the resistance you have overhead. You have the 200-day moving average, confluence model, center band. So not something I'm interested in at the moment. HIMS had a little bit of a recovery today. We have been very beaten up, and it is attempting to form a higher low here. We can get some more info on the 4-hour because it had already gotten back into the center band, broke back below, and now got back on top. I was staying out of it just to, see where the dust would settle because it has been weak. But if you did get in this, it does look like it is attempting to recover. We're getting into the squeezing of the bands here, which just foreshadows that we're most likely going to tighten and could, after this long downtrend, move back into an uptrend for him. So that's definitely one to keep on the radar next week. All right, Fintech, because I have not covered it much, and a lot of people have been asking about Hood, which is one of my biggest longer-term hold positions. But Hood, really, after this massive move from the April lows, is just in a tightening range. And if we draw our resistance overhead and we draw our support down below, we can connect the dots through here. You can just see how we're trying to find equilibrium. We seem to be forming a higher low and are oversold on the daily. On the weekly, we are not reset yet, but you could make an argument saying, okay, our weekly uptrend support's about 45. We're getting close to that. A little bit too soon to tell, but I wouldn't be surprised if Hood, honestly, just even if it breaks this low, just chops around for another couple months before deciding which way it's going to go. I'm just taking a wait and see approach after this massive run up. When things get this elevated, they just need time to take a breather before the next massive move. And if we're drawing our trend lines, you could even draw one in here. There are only a couple touch points, so we're speculating at these being trend lines. But if we get resistance a third time from any of these or support, they will be valid, and we can just watch them for a break up or a break down. Now, NU, to me, was looking interesting, but it broke back down. So we had a cup and handle here on NU, broke up, broke down. Now we're right underneath it for resistance. If we can reclaim that and continue to move into an uptrend, this would look more convincing. We are a bit extended, but we could run further on the weekly. So yeah, just keeping my eyes on this to see if it can really meaningfully get back above that resistance. And the 4-hour is suggesting that it is oversold and is going to attempt that. Now, coin, like the rest of crypto, has been weak, and we broke our uptrend that we've been in for, well, a long time, since the April bottom, and we rejected from the underside of that and the 200-day moving average. We are attempting to maybe make a higher low here in the recovery, but I think that would be predicated upon crypto also doing well. Coin has released some new features, and for institutions, they are offering tokenization of assets. So they will be the backbone if any stock exchanges want to do that, perhaps, or I don't know if private entities can do it as well. So they are diversifying, but the retail hype just got too elevated. And this is almost an example like Hood, but to an extreme degree. This move up was massive. And if you've been watching along for a while, you'll remember this 100% price and time extension we drew out, which targeted actually the exact high we hit at 444, was saying that if we did a 100% extension of the first part of the bull run, that we would hit that target by the end of 2026. That had us at, my calendar's not loading, but it was October. You'll have to take my word for it. I don't know why the dates aren't loading all the way down there on the 4 hour. And we got to that way sooner. And normally in a second leg extension, you expect the price target to be hit sooner, but like February 2026 sooner, not July of 2025 sooner. So it just needed to take a breather. And hopefully now it can be in the process of finding a base. But if crypto continues to be weak, I'm a little bit weary of this and might just give it some more time. Tiger, nothing more to report. We were looking for a potential breakout of this falling wedge. It's been struggling with it. So it's attempting this again, but we projected, okay, this could drop all the way down to $7 before attempting this wedge breakout. So just keeping my eyes on it. Circle is attempting to recover, and you could say cup and handle. The handle's a little bit big, but I'm just watching this as this squeezes. If this is our higher low, will we make a higher high and continue in this uptrend for Circle? It's been very beaten up, so just want to give it some more time. All right, I have been getting requests to look at Chinese stocks because they are going to move again eventually, but they've been very beaten up. But if we look at BABA, it's been in this massive falling wedge. We just found support from the underside of that. I'm just watching this for a break. We definitely are oversold on the 4 hour. If we go on to the daily, we have a mean reversion dot. Haven't gotten all the way reset on RSI, but BABA could potentially have a move higher. Baidu has a flag pattern as well, trying to break out a little bit stronger than BABA actually, which is surprising because it had been lagging. And we have a wedge breakout price target at 175. We're currently at 123, so has some more room to run. Congratulations if you snagged this low at about 100 on Baidu. That was not a bad entry. Bilibili, I've been waiting for this one to find support. It seems like we might be forming a bit of a double bottom here on the daily for this stock. And we are also attempting, if we go out to the weekly, a 1, 2, 3, fourth time breakout, which we haven't gotten to yet. But I've been scouting that for Bilibili. And on the weekly, we are right on support. So this is actually to a point where an entry would make sense to attempt for bounce higher. This is the YouTube of China, is the best way I can put it. JD is continuing to look weak. Unfortunately, we are getting into the point of control and support at about 27. We're currently at 28, maybe making a little bit of a double bottom. If we go on the daily, you can see this a little bit better. Trying to bounce today, maybe a double bottom, but still has a lot of ways to go for recovery, and then we'll have resistance overhead at about 31. And NIO just trying to form a base. Actually, not Chinese stock, but let's look at Rivian because it has been running on hype and is moving to the price target. You know, everybody thought this isn't going to hit the price target of 27 from this massive wedge, but it looks like it's on its way to do that, and it would probably be a good short at that point because the fundamentals are still terrible and it's going vertical. I mean, this will be, just such an obvious short at that juncture. And look at it on the weekly. Even the weekly, the wedge on the weekly broke to the upside as well. So let's keep our eyes on that for opportunities to get in position. I'm going to set my alerts already here. All right, story of the week was cannabis stocks, which did get rescheduled as a Schedule 3 drug. I believe that was just yesterday on the 18th. So it was definitely a sell the news event, but this will be big for the industry. And I'm just seeing where we got to. So we dropped a little bit below the 50% of this entire range. So I imagine we might pull back a little bit more to the 382 at $4.69. I'm going to set my alert there. Not that I'm kind of weary of trading these, but if you are interested for a bounce play, this could just be an overreaction on people taking profits from the hype. Things are definitely overheated on the 4 hour. Let's look on the daily. Yeah, on the daily, they're overheated as well. And we have a massive gap to contend with all the way down here at 381. I think I'm going to honestly, personally, stay clear of these and just let the dust settle. And TN, what is it? CR? No, it's TLRY. I know there are a few of these, but Tilray Brands, just want to see one of the brand players. All right, also pulled back massively and has a similar gap to MSOS, which is the ETF there, and TLRY just right below the 50% on the close. So yeah, if you want to trade these, be careful, but I'd give them a bit more time. All right, just looking at gaming real quick. Roblox continuing to break down. Surprisingly, I thought we would have recovered in this last little consolidation zone, but at the 236, we have support coming in there. I'm going to preemptively set a little bit of an alert, because if we can get to this level at 75 bucks, that would be a good value zone, and we're oversold on the daily. The weekly's soon going to be oversold. So definitely worth watching. And I was just measuring off of the March, April low right here. But if we go all the way to the bottom of the bear market and those previous swing lows, yeah, we were on the 50% and dropped down. And also the 382 would be coming in there. If we measure it off of here, yeah, I think that makes a lot of sense. All right, let's keep our eye on that one. Unity, after being a bit overheated, and we have much higher price targets for it, but it pulled back and now is finding support and recovering on the 4-hour. The daily, you can see, is still a bit overheated, but we essentially took the first swing in the upper band, found support, and now are attempting a move higher. We're right into our breakout zone resistance, but let's see what it can do. On the 4-hour, we took our couple swings in the upper band, are consolidating. We might reject here a couple more times, but looks like it is attempting a recovery and has potentially set a higher low, and all in all is looking strong, I'd say. All right, last thing, we will just, I want to look at robotics too. All right, we're gonna look at metals, robotics, and then we'll end with crypto, and my eyes are burning. Anyway, Rio keeps breaking out and moving higher to our eventual price target up here at 98. This has been one of the best performers in my portfolio the last couple months with the call options I have. CLF is also not loading. No, continuing its recovery, higher low. We're just right into a trend line resistance right now, which we tried to break out from once. We're a bit overheated and rejected back down. So breaking back above this line next week would be a good sign. We have some mean reversion dots, but we're not fully to the top of the range with RSI. Let's look at the 4-hour. The 4 hours trying to break into the upper band. So you can just see this trend line is providing a bit of headache for us. So potentially we pull back, but a breakthrough would be a good sign. And I just wanted to look at REMX because it keeps knocking against this ceiling that's been on the price action at about 74 bucks. And you could argue that we have an ascending triangle right here. So watch this for a breakout next week. UUU has been recovering and forming a basing pattern. We bounced off the 382, and you could make an argument for an inverse head and shoulders trying to shape up right there, but looks like it is recovering. URA, same thing, higher low, not necessarily a pattern. It's too big for a cup and handle, but looks like it wants to move higher and test the 786 at 51 bucks. And USAR found a bit of resistance here, dropped just below the 200-day, but we're on support and hopefully making a higher low and seeing if this can continue on in the recovery. You can ignore my little measurement there. And last one, because we looked at silver and gold, but platinum has been on an absolute tear. If we look at platinum, just going vertical in the last week, how much did we move in that swing? 25%. Massive move for platinum. So congratulations if you were monitoring this and if you got in on this trade. You know, I said we would go through robotics, but these charts are a bit more complicated and deserve more time to talk about them. So let's do that next week. I'll just touch on SYM because I got in on this earlier in the week and we have almost closed the gap fill. Actually, we just about hit it, and we bounced off this trend line. So down a little bit from my entry because I got it in this consolidation range, but we have a mean reversion dot on the daily, and the 4-hour was right on support. Actually, I think I got in when we were bouncing off support somewhere in here and the point of control. So seeing that we're holding this is a good sign, and I'm just looking for a bit of a recovery. But the rest of the robotics charts are some of the more challenging ones from a charting perspective. All right, last thing, just looking at crypto, and I'll start with Solana again because that's the one I got out of yesterday when we broke this range, and we got back into the range today, which is a good sign. And now the question is, was this just deviation? Well, the chart has a little bit more proving to do. We still have this clean overhead resistance, and on the daily, we have the confluence model center cloud. Really, to tell me that this is nothing to worry about anymore, we'd have to break above 144. Getting above 130 would be a good sign, making some higher highs in the recovery. If we look on the 4-hour chart, we can see we're still underneath that downtrend. We still have the 4-hour confluence model center cloud as resistance. So we're right into that right now. There is room to recover, absolutely. On the 4-hour RSI and mean reversion, it just has more proving to do. And I would rather than say chase this back in after getting out on the breakdown, have it prove to me that it is going to be able to mount some strength to recover. And the thing that makes me think that it could potentially recover is Bitcoin, because it has put in a stronger candle. It hasn't broken down with fresh lows. We're still stuck underneath that 89K, which is the main hurdle to get over. And then we have the confluence model center band and our major downtrending resistance coming in soon. So those are all things that we need to get over to recover. But let's watch it over the weekend because it is set up on the daily and the 4-hour to have a lot more room to the upside. And everybody's been thinking this is a bear flag, so I wouldn't put it past Bitcoin to do the opposite. And, I will just have to take the hit if that's the case on Solana, getting in at higher prices after selling lower. But I was following my rules. And the first half I sold was, at around 170 to 180 on the daily trendline breakdown on Solana. So all in all, I'd probably still come out ahead, getting in at around 130 to 144. All right, so that is it for the charts. I would say all in all, things are looking positive. We have some new sectors that we want to keep our eyes on. And just as a reminder, moving into the 2 holiday weeks, and we have the Christmas holiday and then the New Year's holiday smack dab in the middle of each of the 2 following weeks, I'm going to go back to the previous format. Before I was doing this every day, so we'll have a bigger video on Monday and on Friday, and then I'll do a shorter midweek check-in. So we'll go back to that for the next couple of weeks, and then I imagine, since all of you appreciate this daily format, we'll be moving back into this in January. So I hope you have a lovely weekend and that you are starting to get in the holiday spirit, that you're with loved ones and family, and I'll see you on Monday for the weekly outlook. Bye for now.